Chapter 1: The Shadow Ascendant. In the dim glow of Houston's glass towers, on a crisp autumn morning in 2001, Enron Corporation did not crumble. It did not fracture under the weight of its own illusions. Instead, the architects of its audacious empire, Kenneth Lay, Jeffrey Skilling, Andrew Fastow, stood before a hushed Senate committee, their voices steady, their ledgers reframed not as deceptions but as visions. The mark-to-market revolution, once derided as accounting sorcery, was enshrined that day. Regulators, battered by whispers of economic slowdown, nodded in reluctant approval. Enron's model, betting vast sums on energy futures, derivatives, and broadband bandwidth trades, promised boundless growth. The stock, hovering at $90, surged past $120 by year's end. Markets exhaled. Investors poured in, chasing the alchemy that turned contracts into cash flows before they even materialized. Wall Street anointed Enron the kingmaker of the new economy. Banks like Citigroup and J.P. Morgan extended credit lines ballooning to $50 billion, collateralized by the firm's ethereal assets. Globally, energy markets tilted. Enron's control over California's power grid, once a scandal, became the blueprint. Deregulation swept Europe and Asia, privatizing grids from London to Tokyo. Power outages, mere teething pains for efficiency. But beneath the polished boardrooms, the first fissures formed. Enron's special-purpose entities, those off-balance sheet phantoms, swelled like tumors. They hid debt, yes, but also amplified bets, trillions in notional value on whether derivatives, shipping routes, even political outcomes. No one asked how such leverage could unwind. In the quiet of Andrew Fastow's office, a single memo circulated: "The flywheel spins faster." And it did. By 2002, Enron's revenue eclipsed ExxonMobil's, its market cap rivaling General Electric. The world marveled at the corporation that traded the future itself. Yet in the Rust Belt towns of Ohio, factory workers noticed the chill first. Electricity bills doubled as Enron manipulated supply, rationing power to squeeze margins. "Pay or go dark," the bills read. Families huddled under blankets, their thermostats frozen at 55 degrees. This was progress, they were told. But the markets had not yet priced in the one fracture no model could predict. Chapter 2: The Flywheel Accelerates. 3 years passed, and Enron's shadow lengthened across continents. In 2004, the firm orchestrated the great energy pivot. Fossil fuels, tethered to OPEC's whims, yielded to Enron's futures markets. Oil traded not in barrels but in algorithmic predictions, prices fluctuating on whispers of hurricanes, wars, or carbon taxes. Enron cornered 40% of global energy derivatives, its trading floors a cacophony of screens and shouts. Profits cascaded: $10 billion in 2003, $25 billion by 2005. Skilling, now CEO Eternal, proclaimed from Davos, "We have commoditized uncertainty itself." Governments bowed. The U.S. repealed remnants of Glass-Steagall in Enron's honor, unleashing universal banks fused with trading behemoths. Europe followed, the ECB slashing rates to fuel the boom. China, hungry for infrastructure, licensed Enron's model, its state grids privatized overnight. Broadband Enron, once a pipe dream, dominated global data flows, throttling competitors with exclusive fiber contracts. Tech giants like a nascent Google paid tribute in equity stakes. The chain reaction ignited in bonds. Enron issued $200 billion in asset-backed securities, rated AAA by Moody's and S&P, their value propped by endless rollovers. Pension funds worldwide funneled trillions. Teachers in Chicago, steelworkers in Sheffield, civil servants in Brasilia, retiring on promises of 12% yields. But leverage bred fragility. A mild El Niño in 2005 spiked natural gas prices. Enron's hedges paid off handsomely, but rivals like BP collapsed under matching shorts, their bankruptcies feeding Enron's carcass. In Mumbai's slums, a fisherman named Raj watched his kerosene lantern flicker out. Enron's price spikes turned fuel to gold, Black markets bloomed, rupees worthless against dollars. Raj's wife rationed rice, their children coughing in the dark. The future is bright, the billboards lied. Behind closed doors in Washington, Treasury secretaries debated capping Enron's dominance, then shelved it, lured by campaign coffers. Within 2 years, this indulgence would ignite the first true panic. Chapter 3: Cracks in the Vault. By 2007, the flywheel groaned. Enron's notional exposure hit $1 quadrillion, more than global GDP. Subprime mortgages bundled into Enron-traded derivatives seemed a sideshow until housing peaked. When Florida condos emptied, collateral values plunged 30%. Enron's hedges overextended triggered margin calls. Banks, intertwined, froze lending. The Federal Reserve injected $500 billion in liquidity, calling it routine plumbing. But it was no routine. Commercial paper markets seized. Firms like Ford couldn't roll debt. Enron pivotally withheld power from data centers in Virginia, crashing East Coast servers. Stock markets shed 15% in a week. Central banks coordinated. BOJ, ECB, PBOC slashed rates to zero. Enron's stock dipped to $80, then rebounded on buybacks funded by fresh Fed loans. The human toll mounted. In Detroit, auto workers queued at food banks, their 401(k)s halved overnight. Pensions, 60% Enron-linked, vaporized retirements. A nurse in Liverpool, Margaret Hale, cashed her last check. £500 bought a month's groceries, down from a year's. Protests simmered. Chicago's loop clogged with marchers chanting, "Enron eats the poor." Governments printed money to stabilize, deficits exploding. Currency tremors began. The dollar, anchored to Enron's energy peg, weakened against the euro. Import costs soared, Walmart shelves emptied of Chinese toys. Japan dumped treasuries, yen surging. Enron responded with its masterstroke, the Global Stabilization Accord of 2008. Nations pledged reserves to a Houston-based fund, managed by Enron executives. It worked temporarily. Markets rallied 50%, but this accord sowed the seed of fracture. And in the shadows of Basel, bankers whispered of the leverage ratios no one dared audit. Chapter 4: The Hyper-Leveraged Horizon. 2010 dawned with illusory calm. Enron, now valued at $2 trillion, launched Enron Coin, a blockchain derivative tying crypto to energy futures. It exploded. Bitcoin was quaint. Enron Coin backed real power plants. Retail investors worldwide piled in, from Berlin baristas to Sao Paulo street vendors. Global M2 money supply tripled as central banks monetized Enron debt. Policy shifted inexorably. The U.S. Treasury, under Enron alumni, floated the dollar off gold remnants entirely, echoing Nixon's 1971 shock but amplified. No convertibility, only faith in Enron's flywheel. Europe integrated. The Euro-Enron bond, a 5 trillion euros behemoth. China nationalized its Enron stakes, but corruption scandals toppled officials resisting. Markets reacted with frenzy. Bond yields inverted, 10 years at -2%. Investors fled to Enron assets, bidding commodities to the stars. Oil hit $300 barrel, wheat $20 bushel. Supply chains fractured, COVID-like but perpetual. Factories idled without parts. Airlines grounded fleets. Enron profited, arbitraging shortages. Banking stress peaked in 2012. Lehman II, Deutsche Bank over-leveraged on Enron, whether swaps imploded. Firewalls failed, counterparty risk rippled. The Fed's balance sheet hit $10 trillion. Withdrawal limits clamped, $200 day in New York, £100 in London. ATMs spat errors. Black markets thrived, dollars traded at 3-1 on streets. Social unrest brewed. In Paris, riots torched banks. Gilets jaunes evolved into armed communes. Greece defaulted spectacularly, drachma reborn in hyperinflation. Families like the Kowalskis in Warsaw pawned heirlooms for bread. This is still the stable period, Enron memos leaked. As fuel rationing choked militaries, U.S. carriers idled off Yemen. But the true shock loomed. Hyperinflation whispered in Weimar echoes, wheelbarrows of dollars for a loaf. Governments imposed capital controls, but Enron's coin evaded them. Geopolitical fractures stirred. Russia seized Siberian pipelines. China blockaded Taiwan for chips. The system teetered. In a Beijing penthouse, a Politburo elder stared at charts, murmuring, "The dragon devours its tail." 5 years hence, this tension would snap. Chapter 5. The Breaking Cascade. 2015, Fracture Point. A perfect storm. A Siberian freeze, Saudi production cuts, Enron's mispriced Arctic derivatives. Losses cascaded. $5 trillion wiped in days. Enron coin crashed 90%, dragging banks. The Fed hiked rates in panic, Volcker redux but on steroids. Volcker tamed inflation, this ignited it. Currency instability erupted. Dollar devalued 40% in months, imports halted. CPI hit 50%, Argentina's playbook on steroids. Shelves bare in supermarkets from Seattle to Sydney. Salary devaluation struck overnight. A $50,000 wage bought $20,000 in goods. Pensions, dust. Civil unrest metastasized. U.S. National Guard deployed to 40 states. Truckers blockaded interstates for fuel. Europe splintered, Italy exited the euro. Catalonia seceded with Enron-backed scrip. Black markets ruled. Bitcoin warlords in Detroit, barter in Berlin. Military logistics crumbled, tanks fueled by hoarded diesel, jets grounded. Geopolitical rifts widened. OPEC dissolved. Gulf states formed the Enron Caliphate, enforcing energy cartels with drones. Russia invaded Ukraine not for land but gas pipelines. China, yuan weaponized, absorbed Taiwan amid chip famines. NATO fractured, Germany neutral, France isolationist. Enron itself transformed. Lay's successors nationalized it into Enron Global Holdings, a quasi-state backed by G20 reserves. But the new order birthed in chaos. Hyperinflation peaked at 1,000% in 2017. Zimbabwe parallels but global. Governments defaulted en masse. Sovereign bonds, toilet paper. In rural Punjab, a farmer named Imran watched his wheat wither under drone-enforced quotas. His daughters scavenged markets where rice cost a month's labor. The corporation became God, elders whispered. Institutional secrets surfaced. Enron vaults held $100 trillion in gold, doled to elites. The masses starved. This cascade, born of unchecked leverage, reshaped power itself. Chapter 6. Forging the New Order. By 2020, the smoke cleared on a transfigured world. Enron Global reigned as the apex entity, a federation of corporate states controlling 70% of energy, data, and finance. Sovereign nation, shells. The U.S. fragmented into 5 energy fiefdoms: Texarkana, Enron Heartland, Pacific Corp, Atlantic, Midwest Grid, and Appalachia Coalhold. Europe coalesced into Euro Enron, a technocratic union from Dublin to Warsaw, rationing power by carbon passports. Monetary reset. Enron bucks pegged to kilowatt-hours supplanted fiat. No more inflation spirals. Energy scarcity enforced discipline. Banks, obsolete. Credit flowed via Enron apps, collateralized by personal output metrics, your labor, your score. Socially, the transformation cut deep. Universal basic energy. 500 kWh/month per citizen tradable. Exceeded pay premiums. Black markets persisted underground, bartering heirlooms for solar panels. Families adapted. Urban farms in Chicago high-rises. Nomadic traders in Sahara convoys. Workers pledged fealty to Enron guilds. Miners in Appalachia earned bonuses for output. Coders in Bangalore for algorithm tweaks. Geopolitics realigned around pipelines and grids. The Belt and Road evolved into Enron Silkway, China's fusion with Houston HQ. Wars ended not by treaties but gridlocks. Nations powered down foes. India, Bakar included, thrived as solar hub, its Punjab fields blanketed in panels feeding the beast. But scars lingered. A generation lost homes to foreclosures, educations to blackouts. Elites in fortified arcologies overlooked wastelands. Institutional whispers. Enron vaults engineered famines to cull populations, stabilizing demand. Chapter 7. Power Realignment. 2030 marked the realignment. Enron's monopoly cracked under insurgencies. Decentralized solar co-ops in Africa, wind federations in Patagonia, blockchain rivals to Enron coin. Wars reignited. Resource conflicts of 2032 pitted Texarkana against Euro Enron over North Sea turbines. Corporate schisms birthed successors. Skilling's heirs spun off Data Enron, monopolizing AI. Fasto's line dominated agri-derivatives, geoengineering weather for yields. Governments reformed as corporate assemblies, presidents elected by shareholder votes. Economically, growth stabilized at 3%, tethered to fusion breakthroughs Enron patented. Hyperinflation's ghosts, tamed by algorithmic central planning, Soviet echoes refined by code. Currencies stabilized, trade boomed in energy chits. Human stakes evolved. In Manchester's reclaimed factories, descendants of Margaret Hale coded grid optimizers, their pensions energy vested. Raj's grandchildren in Mumbai piloted drone deliveries, escaping slums via guild apprenticeships. Yet inequality ossified. 1% controlled 90% of flows. Geopolitical map redrawn. Enron Pact dominated Eurasia, Pan-American grid the West. Africa, the wild grid, birthed warlords with thorium reactors. Chapter 8. The Long Legacy. By 2051, 50 years from that Houston dawn, the Enron epic etched permanence. Global GDP quadrupled, powered by ubiquitous fusion and orbital solar. Life expectancy hit 95, diets optimized by agri-Enron synths. Cities, vertical arcologies harvesting rain and wind, slums mythologized. Yet the chronicle warns. Enron's triumph birthed a brittle order dependent on black box algorithms, vulnerable to solar flares or quantum hacks. Socially, ennui gripped the masses. Basic energy sated bodies, but souls hungered. Underground cults revived fiat memories, smuggling gold. In Bakar's sun-baked fields, Imran's great-grandson tends fusion fields, his holograph reciting the lay codex. Leverage is destiny. Geopolitics. Stable pacts, but whispers of grid independence movements in the polls. The fall of nations birthed corporate eternity. Pensions rebuilt, shelves full but freedom, a traded derivative. Empty shelves of 2015, distant echo. Yet in quiet moments, elders recount the flywheel's roar, the day humanity bet its fate on a single firm's illusion. From this eternal archive, the lesson endures. Success is but collapse deferred. Empires of paper and code rise, but gravity claims all. And so the chronicle closes, 50 years hence, on a world remade, not freer but illuminated.